You've never seen a branch, never opened an account, never received a card, but it controls your money. In 2020, it rescued Wall Street. In 2022, it rewrote Europe's economy. Today, it negotiates with governments. And tomorrow, it might decide the value of your future. It moves trillions, lends without permission, profits when the system fails, and no one ever asked who's behind it. And the strangest part? It's not a bank. At least, not officially. Today, you'll uncover the name of the most powerful institution in the world that you never realized existed.
You know your bank. You know your balance. You think you know where your money is. But what if the real financial system, the one that decides how credit flows, who gets funded, and when markets rise or fall, operates outside of what you see? It doesn't have branches. It doesn't take deposits. It doesn't appear on your banking app. But it moves more money than the entire U.S. economy every single day. They call it the shadow banking system. Not because it's illegal, but because it's invisible. It mimics the behavior of banks without being one. Here's how it works. A pension fund needs short-term returns. It doesn't lend to a bank, it lends to a money market fund. That fund buys commercial paper issued by a multinational. To hedge the risk, a hedge fund enters a derivative contract. To collateralize the deal, someone borrows in the repo market using assets they don't fully own. No regulator steps in, no deposit insurance covers it. It's a web of promises stacked on top of more promises. Each contract legal, each layer opaque. In 2023, this shadow system controlled over $150 trillion in assets. That's not a typo. It's more than the global GDP. And yet, you've never heard a politician talk about it because they can't control it, because they use it. Governments borrow through it. Corporations fund themselves through it. Even central banks interact with it, sometimes to stabilize markets, sometimes just to keep up. And when a crisis hits, this system doesn't stop. It accelerates because it was built for speed, not safety, for liquidity, not transparency, for performance, not accountability. No single firm controls it. No single regulator oversees it. It's a network of thousands, interconnected, automated, constantly moving. It's not a conspiracy. It's a design. One that turns money into data, data into risk, and risk into opportunity. For those who know where to stand when the current shifts. And for everyone else, they see the surface, they feel the ripple, but they never see what's underneath. The next time your bank raises fees or your country announces a stimulus, ask yourself, where did that money come from? And more importantly, what chain of invisible debt just got longer? Because in this system, money never stops. It just disappears and reappears on someone else's terms. But who built this structure? Who profits from it? And why can't it be turned off? That's where we go next.
It doesn't have a building. It doesn't issue loans. It doesn't even call itself a bank, but it creates money every day. This is the shadow bank. Not a single institution, but a network, a web of funds, clearinghouses, structured finance vehicles, designed to act like banks without following their rules. They don't take your deposits. They don't offer you a credit card, but they offer credit on a global scale. Here's how it happens. Let's say a company wants to borrow $500 million. Instead of going to JP Morgan or HSBC, it goes to a private debt fund. That fund raises capital from pension managers, sovereign wealth funds, or insurance companies. No bank involved, no oversight, just a contract,
just yield. Multiply that by 10,000. Now you see it. Trillions moving through invisible channels. The institutions behind this? Collateralized loan obligation vehicles, money market funds, hedge funds, synthetic credit issuers. They have no storefronts. They use code names. They exist in spreadsheets and offshore registries. And here's the irony. Many of them are backed by the same banks they pretend to replace, through affiliates, through shell structures, through legal firewalls. Why? Because banks want exposure without accountability. They want returns without regulation. Shadow banks give them both. And they don't just serve corporations, they serve countries. In recent years, emerging economies have turned to non-bank lenders to fund infrastructure, energy, even sovereign debt. The deals are fast, quiet, flexible. But when things go wrong, there's no lender of last resort, no safety net, just default and silence. Because these institutions aren't built to absorb losses. They're built to distribute them fast, wide, and invisibly. It's financial engineering on a planetary scale. And yet, no one calls it what it is, because no one wants to regulate what they can't define. They call it market innovation, private credit, alternative financing. But functionally, it is banking, just without a license. And here's the danger. When you remove the guardrails, the system doesn't slow down, it speeds up. In 2008, it collapsed under its own weight, but instead of dismantling it, we doubled down. More credit, more complexity, less visibility. Today, the biggest lenders in the world may not be banks at all. They may be funds you've never heard of, platforms with no employees, entities with no nation, no regulator, and no exit plan. And they're growing because they're profitable, because they're fast, because they don't ask permission. So ask yourself, if this system creates credit but answers to no one, what happens when it needs a bailout? And who pays when the lights go out? Next, we look at the mechanics behind this power, how money moves without being touched. Because in the shadow system, influence doesn't come from holding cash. It comes from controlling what no one else sees. They don't print it, they don't hold it, they don't even see it. But they move more money than the world's central banks combined. This is the genius of the modern system. You don't need to own the money. You just need to control how it flows. In the shadow banking world, control happens through instruments, not cash, through agreements, not balances, through exposure, not ownership. It begins with a simple idea: leverage what you don't have. Let's say a hedge fund wants to increase its position in government bonds. Instead of buying them, it enters a repurchase agreement, a repo. It borrows the bonds overnight using them as collateral for cash. Tomorrow, it does the same thing, and again, and again. Each cycle creates synthetic liquidity, new money, new leverage, no bank account needed. Now scale that across asset classes, real estate, credit, derivatives, commodities, and suddenly, a market emerges where everyone has exposure, but no one holds the risk. Because every position is hedged, every asset is offset, every liability is mirrored somewhere else. This is the world of structured finance, a world where a mortgage isn't just a mortgage, it's part of a pool, which backs a bond, which supports a derivative, which is traded through a fund, which is held by a trust, which is insured by another derivative. Layers on layers, promises on promises. The asset is real, but the system surrounding it, pure abstraction. And that's the point. If no one holds the asset directly, no one is fully exposed. And if no one is fully exposed, Everyone feels safe until they're not. Because when one layer cracks, the shock doesn't stop, it echoes. And no one knows who's holding the real bag, or if the bag even exists. This system is not built for accountability. It's built for velocity. Speed is the shield. Complexity is the armor. That's why in a liquidity crunch, the first casualty is clarity. Institutions scramble to find out what they really own, what they really owe, and to whom. By then, it's too late. This is not theoretical. It happened in 2008. It almost happened in 2020. And the architecture hasn't changed. In fact, it's gotten smarter. Algorithms now manage exposure in real time. AI models scan for arbitrage before humans blink. Settlement happens in milliseconds. But understanding who actually owns what? That could take weeks, or never. Because the system was never designed to be transparent. It was designed to be efficient. And in finance, efficiency beats visibility every time. So if no one holds the money, if every hand is clean and every risk is outsourced, then who is left when something breaks? Who stands still when everything moves? In the next chapter, we uncover the answer no regulator wants to say out loud, that this system, massive, profitable, and global, was built specifically to avoid the rules. No one's breaking the rules because the rules don't apply here. In the traditional banking system, everything is supervised. Deposit insurance, capital requirements, reserve ratios. Every dollar has a name. Every risk has a limit. But in the shadow system, those constraints don't exist because it wasn't designed to be part of the system. It was designed to orbit around it, close enough to access liquidity, but far enough to avoid the law. And that's not a loophole. It's the core feature. Take repo markets. Every night, trillions move between institutions through contracts that look like loans, but aren't, because they're technically sales with agreements to repurchase. Same effect, different name. And that difference means no reserve requirements, no regulatory scrutiny, no capital buffer. It's banking without the bank. Now add in money market funds. They promise liquidity, stability, safety. But they're not insured. They're not backed by central banks. When they break the buck, when $1 becomes 0.97 cents, there's no guaranteed rescue. Just panic. Just silence. And yet trillions are parked there by cities, states, corporations. Because it's cheap. Because it's easy. Because the illusion of safety is cheaper than the cost of regulation. That illusion is everywhere. Collateralized debt, synthetic swaps, private credit funds, each designed to mimic a function of the banking system, lending, borrowing, hedging, but with different labels, different jurisdictions, different accountability. Who regulates a Cayman Islands fund issuing dollar-denominated debt to a Singaporean investor secured by U.S. treasuries lent from a Luxembourg trust? No one. Not really. And that's exactly how it was meant to be. The global financial system didn't stumble into this architecture. It evolved toward it, pushed by institutions seeking yield, facilitated by policymakers seeking liquidity, ignored by regulators overwhelmed by its speed. Because here's the uncomfortable truth. The more complex the system becomes, the harder it is to regulate. The harder it is to regulate, the more it attracts money. The more money it attracts, the more systemic it becomes. until we reach a point where the system is too opaque to fail. Not because it's safe, but because no one knows what happens if we try to shut it down. So regulators turn a blind eye. They issue guidance instead of rules. They monitor instead of intervene. Because the last time someone tried to regulate shadow banking, markets convulsed, credit froze, panic spread. And the rescue? It didn't come from Congress. It came from the same institutions that caused the problem. So the system survives, not because it's stable, but because it's necessary. At least, that's what they want you to believe. But what happens when something goes wrong again? What happens when a chain of promises unravels and no one knows where the risk really is? That's where we're headed next. Because the scariest part isn't how big this system became. It's the fact that now it can't be turned off.
It was never supposed to get this big, not this fast, not this quiet. But here we are, with a financial system that creates credit without banks, moves risk without oversight, and powers economies without permission. And now it can't be turned off. Because unplugging it doesn't just crash markets, it crashes governments, it halts trade, it freezes entire sectors of the global economy. Shadow banking was born as an alternative, a workaround, a shortcut. But over time, it became the foundation. When central banks want to inject liquidity, they do it through repo markets. When corporations want fast credit, they go to private debt funds. When countries want flexibility, they issue through offshore vehicles. Everything now depends on a system no one controls. And here's the most dangerous part. Every fix only deepens the dependency. When a money market fund wobbles, the central bank steps in, not to punish, but to stabilize. When a synthetic credit chain cracks, regulators backstop it, not because they trust it, but because they fear the alternative. We didn't just tolerate shadow banking. We normalized it. We built policies around it. We structured bailouts with it in mind. And now, every market correction, every rate hike, every fiscal decision has to account for what's lurking in the shadows. Because if the shadow system fails, it won't fail alone. It will drag everything with it. And we won't even see it coming. Because the system was designed for invisibility, not for clarity, not for fairness, not for resilience. It was built for speed, for access, for profit. And that's why no one is brave enough to stop it. Too many institutions rely on it, too many careers depend on it, too much debt is already flowing through it. So the world keeps spinning, the contracts keep rolling, the credit keeps pulsing through digital veins, quietly, dangerously, unstoppably. We've created a machine that no longer responds to switches, only shocks. And when the next one comes, we won't be regulating it. We'll be begging it not to collapse. Because this isn't a shadow anymore, it's the system itself. And now you have to ask yourself, if the real engine of global finance lives in the dark, what else have we built on illusions? And what happens when the lights finally go out? Now you've seen what most never do. Not a theory, not a rumor, but the invisible machine beneath global finance, real, operational, and untouchable. It doesn't wear a logo, it doesn't obey borders, and yet it shapes everything. Markets, governments, your money. And the scariest part? It's not hiding, it's just not being looked at. If this opened your eyes, imagine what else is being hidden in plain sight.
We investigate the systems no one dares to question and expose what was designed to stay buried. So if you want more, like this video to push the signal forward. Subscribe if you're ready to keep pulling the thread, because the deeper we go, the clearer the truth becomes. And once you see it, you can't unsee it. This is just the beginning.